Hi, everyone, and welcome to this installment of our Royal Tax Show. Of course, my name is Scott Royal Smith. I am the owner of Royal Legal Solutions, your one-stop shop for everything asset protection, estate planning, and tax related, all underneath one roof, serving clients in all 50 states and every asset class. I am joined today by my partner in crime, Pete Schindele, who is our in-house CPA, MBA, and also CFO of Royal Legal Solutions. So thank you so much for joining us here today. Pete, kick us away. What are we going to be talking about here today? What's important about today?
Today we're going to discuss about the solo 401k for individuals that have no 1099 or W-2 income. So they're mostly just going to have a passive income through rentals.
Yeah, so this is like the typical person that says, hey, I work that 9-to-5 job. You know, I'm making money through my typical 9-to-5 and I'm W-2 there. I'm making money through some of my real estate with my rental income, but I don't have any other types of income that are coming into me besides my rentals. Fair to say?
Correct, yeah.
All right, cool. So I prepared some slides here for us today to help guide everybody through this conversation. So can you see everybody, you see this screen okay here, Pete?
Yeah, I'm able to see it.
All right, cool. So yeah, here's where we have our solo 401k. It's our biggest tax saver. It's also our most common tax saver. It's actually what we consider one of our foundational elements for tax savings, that everybody should have retirement accounts in place for them. So of course, I just introduced myself here just a second ago. Of course, my name is Scott Smith. I'm your asset protection, estate planning, and tax attorney. My company is Royal Legal Solutions. We're a modern law firm. We help clients in all 50 states and every asset class. Been around for about 6 years. Have about 2,000 clients. And we grow at a rate of about 15% per year, and our staff scales accordingly. Right now, we're about up to 40 staff members. Very, very exciting being able to help so many people and have a company this size on such a small period of time. And one of the great things about it is because we get presentations that are just like this, that are high education and give away all of the secrets that if anything you would need to know, and try to cut out all the fat and all the sales and just give you the hardcore content. So today we're going to be talking about the solo 401k. Solo 401ks are actually created by Internal Revenue Codes. That's what the 401k and solo 401k stands for. The solo stands for typically like entrepreneur. So it's like a single individual or married couple, but don't worry. No matter who you are, you're going to be able to use a solo 401k, just depending upon what kind of flexibility we need to be able to put in place to allow you to do that. And so let's go ahead and dive right in a little bit about the solo 401k and some of the key features. So Pete, what are some of the key features of the solo 401k that we need to know about rolling in here into 2022?
So for 2022, the IRS did increase the amount you can contribute to a solo 401k. So that'll be a $61,000 for 2022. And if you're over age 50, you'll be able to do a catch-up contribution of $6,500 on top of that $61,000. You can pretty much invest in almost anything. There are some items you're not able to invest in, but that's what the solo 401k offers, is a little more flexibility in investing in property.
Yeah, I think a lot of people that we have in here, right, they're really interested in, like, can I invest in real estate? Can I invest in notes? Can I invest in stocks? Can I invest in crypto? Yeah, and the answer to that is with their solo 401k, you can invest in all of those things. And then you can also invest and manage those funds yourself, right? So just like you'd have like a self-directed IRA with checkbook control, which we're going to be talking about in future weeks, you can also do that with your solo 401k, but you get to avoid the custodian costs that you'd otherwise have to pay with an IRA when you use that 401k. And Pete, I was going to ask you about this. I know a lot of people, they have the money that they're making in the real estate, but they're like, hey, I have an employer, and my employer has a 401k for me. So like, can I create my own solo 401k?
Yes, you can. The only caveat is if you do contribute in your employer 401k, that portion plus what you would contribute in the solo 401k as an employee, those two can't go over the threshold, which for 2022 will be 20,500. So those two can be combined, but the remaining part of that 61,000 can be contributed by your employer business that you're setting up on your side as an LLC.
Cool. Yeah. So I can have everything I got going on with my 9-to-5 job, and I can be using that 401k. But I'm not getting up to the $61,000 mark that I know that I can max out on. So I can use my own money apart from what my employer money. I can use my own money to set up my own 401k with my own business and fund that as well. And if I'm over 50, I can actually put up to like 67,500, the 61,000 plus the $6,500 catch up, right?
Correct.
Cool. Awesome. All right. So 401k sound pretty good so far. I know there's a lot of common myths that I've heard about when talking to people about solo 401k. Some people have said like, well, you know, I can't have more than one retirement account. We just went into that. Like, yeah, you can. No, you absolutely can. You can have one and you can be contributing with your employer. Some people are like, well, I can't self-manage my money. It's like, well, it's one of the key benefits actually of the solo 401k. You're the one, you know, if your brokerage account is titled the name of the solo 401k, guess what? You get to manage your brokerage account. You get to click on the buttons and conduct the transactions yourself. You get to buy the crypto, put it into the wallet yourself. Whatever you want to do, you're able to manage it all yourself. Some people also tell me, says, well, I prefer to use an IRA. For those people, I ask them, why? Why would you want to use an IRA? You have lower contribution limits into your IRA. And then you have to pay a custodian on top of everything else. You got to pay a custodian to basically sit there and slow everything down. With the solo 401k, you get to self-manage. So you get to conduct all those transactions yourself. You don't have to work through a custodian. Now, there is something cool you can do with an IRA called backdooring your IRA, which is you contribute to your IRA and then you just roll that over to your 401k, helps you grow your 401k even faster. Some people will tell me, it's like, hey, I don't have enough money for to plan for retirement. And this is all about like one of those things that's like, well, you know, planning for retirement is one of those things that you build over time, right? You can't trust the government to make sure that you're going to be okay financially. You have to take control of that. So the question in my mind is, great. If you don't have enough money to plan for retirement, what do you have enough money to plan for, right? What kind of plan is going to work for you? Because this is one of those plans that helps you save money on taxes and helps you grow your net worth faster than you can't do anything else. And then I have another people I've talked to says, well, I'm too young to think about retirement. Maybe I should think about retirement, but this is not the right time. And Pete, when you hear people talk about saying like, hey, I'm too young to think about retirement, what goes through your mind as a finance expert?
Just giant red flags. You're never too young to start thinking about retirement and putting money in. The more money you can put in when you're younger, just the exponential growth you're going to have due to the time value of money is gigantic. $100 now when you're younger is going to be a lot better than 500 to 1,000 later on in life.
Yeah, absolutely. We're going to have some charts out too, walking through how do those numbers actually break down. And it's huge, guys. I've been talking about millions and millions of dollars in differences. Doing it one way versus the other. So here, here, Pete, we're talking about some of the top benefits from using the solo 401k, and which of these benefits do you actually hear most commonly when you hear people talk about the solo 401k?
The first bullet points, the one I hear most when I talk to clients, is growing the net worth faster by investing tax-free. So as you kind of touched on earlier, you're going to be able to put 61,000 in tax-free if you have that amount. And then you can use that 61,000 to grow your assets in investing in other type of investments like real estate, which then you can recoup more profit on and not have to pay that average of 25% in taxes. So
awesome. Yeah, I mean, I'll hear too about people coming in and saying, well, you know, can I roll over my retirement accounts from my past employers to a solo 401k? Yeah. If you have prior jobs and you have 401k set up with those prior jobs, you can roll all of those into your own solo 401k and self-manage all that money. Take it out of Vanguard funds and the index funds and actually start putting that money to where you know it's better used, you know, and that you can manage those investments yourself. A lot of people also are really excited about the fact that you can contribute all your money that you have to your solo 401k, and you can either roll over your existing IRAs into your solo 401k and just wind those down and save the money on the custodian fees. And what you could do is keep an IRA account open. You roll your $6,000 in IRA contributions there, and then you can roll it over into your 401k. So that way it's called backdooring. You contribute to the IRA, but then you can roll it into the 401k, and that lets you get more contributions into your 401k. And lastly here, like this is a key benefit that you only get when you set up a 401k through a law firm. Only can get this through a law firm. Nobody else can offer this to you. And it's that you get to control your investments, but you get to have oversight from an attorney. Anybody else you work with in the world cannot give you oversight. They cannot give you legal advice about what investments you're making, or either what's the investment objective that's going to achieve, as well as what are the legalities around how you can make that investment work. So when you partner with Royal Legal Solutions on setting up your solo 401k, you're getting something that you can't get anywhere else, because we're able to give you attorney advice and investment advice that nobody else is going to be able to do. And that's special because we are a law firm. Everybody else is restricted from being able to provide that kind of advice. It only can be given by attorneys. All right. Big question is do you need a solo 401k? So solo 401ks are part of a bigger strategy here. It's number 2 on our wealth temple, our financial freedom temple here. Right underneath making the money, the next best thing we have to do is keep that money from the government. Number 1 rule is we got to keep that money from the government, and that's where tax strategies come in. And solo 401k is your comprehensive type of tax strategy, because it allows you to save money on taxes, but also allows you to control all of the investments, and does it all at a very cost-effective way. When you look at how the solo 401k stacks up among lots of the advantages you have for different tax accounts, right? You'll see that, like, hey, this was your solo 401k contribution at $61,000. You can contribute up to $6,000 in your IRA. We already talked about how you can backdoor that to be able to get more money into your solo 401k. And also, depending upon your state, you also have the ability for these health savings accounts and 529 plans. Health savings accounts are great because they allow you a way to be able to save money for those inevitable health costs that are going to come up at some time in the future. And remember, these are individual. So if you're married, you can actually double what these numbers look like. And that gives you even more incredible savings as we go through it. So when we look at some of the numbers, because we promise you guys are going to go through numbers, so don't get afraid about how these numbers shake out. And right now, I got to tell you that these numbers are even bigger now than they were when I made this slide, because here I have the slide saying that it's at 56,000, which was a prior year limit for a tax contribution. So it's even bigger now. That's 58,000. But this is just representative to be able to show you like what happens with the numbers. So if you have your 56,000, you pay your tax rate on it. You have this much money left to invest. You're making 10% on your money. Then you have to pay capital gains tax on the money that you made investing. Your net worth has then increased. And so we can take your total amount after taxes. That's the total amount you have left to invest, plus the amount that you made in your investments. That's 41,317. If you used a solo 401k, because you didn't have to pay tax on that money, your total net worth is then 61,600. So the difference here is about a 50% bump in total net worth, just because you used a solo 401k versus not using a solo 401k, right? And this is a huge difference in so many ways that we're going to talk about down the road, because this money is real money. You can actually loan this money back to yourself. So you have more capital in play, which makes huge differences on how much money that you have, how fast your money is going to grow, and also how much capital you have there to be able to loan to yourself in case you ever get into a financial pinch and you need to tap some of that retirement account, but you don't have to pay any penalties on it to be able to tap it. So here, Pete, talk us through a little bit around these numbers here. We talked about like, hey, if I could invest, these numbers are going to be even bigger now, right? At 61,000, but let's say it's, even if it was only 56,000 versus a $10,000 contribution, what is going on these charts here that allows one number to be after 30 years over 10 million and one to be less than 2 million?
It's just the interest in the amount of profit you're getting on your base of the total investment. So right off the top, in year one, if you compare the $56,000 contribution to a $10,000 contribution, you're going from 21,000 to 117,000. And as we discussed earlier, that time value of money, the more money you put in earlier, the more it's going to grow through investment, through interest, to where you're going to end up more. So, the rule of 72, if you're in 8%, 72 divided 8%, is going to give you about every 9 years, your money's going to double. But on top of that, you're also able to put all this tax-free, tax savings money in to the solo 401k, which is going to grow that total amount, which is going to keep earning at a higher rate of return.
That's right. Yeah. What we're looking at here is just saying like, hey, when we look at year zero, we made our contribution, then we're going to have enough, we're going to have a 10% return, and then we're investing in the same amount of money into like year one, right? So what happens is that we have more money we're investing in, right? That's important, but it's also the exponential interest that grows over time, right? That comes into it. So the more money that you can put into your solo 401k, there's drastic differences on what the total net worth is going to be at the end of it, with just being able to contribute more money each year. So as you see here, guys, like when you can push more money into your solo 401k, you just get these huge curves that come through the finance curve, right? Versus doing small contributions versus big contributions. And so that's what we're looking for. Is we're looking for, you know, how can we get those contribution numbers to be large into our retirement account, so we have a balling out of control retirement account. So great. So we're actually going to be looking to introduce you guys in the future here some models for how this works with a solo 401k. So in many cases with solo 401k, what happens is that a part of the income has to be employee contributed and part of the income has to be employer contributed. So for all of the money that's employer contributed, there's no tax that we have to pay on that money. Any money that's employee contributed, we still have to pay tax on that fraction of the money, right? So for most people, that's a small percentage that they ended up having to pay out of like an employee contribution. And then they have to pay a small amount of tax on that amount of money. So it's not true that a solo 401k is 100% tax-free from all sources, no matter what, right? It's a case-by-case basis with how much you pay in tax, but it's a minute fraction of the amount of tax that you would pay otherwise. And once you get into the retirement account, we're good to go. So Pete's going to help us look through some models on that, so we can get more specifics for everybody who has that engineer mindset and is like, hey, for me to know that this is the right move for me, I need to know how this is going to drill down to the penny. That's awesome. We're going to work with that on being able to get you that kind of info. For everybody else out there, just know that this is a best practice strategy that is the #1 tax savings tool to be able to use right off the shelf. And for people that are real estate investors with passive income, you also can use the solo 401k by using one of our strategies, which we would say use some type of asset holding company. This is either going to be like a hub and spoke model, a DST, or a series LLC that holds those assets. And typically, none of that money you would be able to contribute to a solo 401k because it'll all be passive income, right? And say, great, I can't use one of the best tax saving tools on the planet because of that. Instead, what you're able to do, though, is say, well, great, I actually have income that I don't want to pay tax on, and it's passive income. So how can I use that for the solo 401k? And what you do is you take the income that you would make here through your asset holding company, you route it through a traditional LLC, typically taxed as an S corporation. So now there's employee income and employer income. And now we can push that money into a solo 401k. So traditional LLC is doing some type of service, some type of asset advisory service, property management service, consultation service, something that's an active business that makes it where it can charge fees to the asset holding company to convert the passive income into active income. And now that it's active income, we can then push it into the solo 401k. So if you're a real estate investor that otherwise thinks that a solo 401k is not able something you do, it absolutely can. We can take that money, we convert it into active income. We'll pay a little bit of tax onto it, very, very, very tiny amount of tax on that money, and then we can get it into the solo 401k to be able to have that for your retirement account. Pete, anything else you want to add in on that methodology or that strategy?
No, I think you covered it. Just again, on that traditional LLC, you'll have to have it be elected as an S corp, and then just pay you or your spouse. So no other W-2 employees.
Perfect. Yeah, one thing to cover in there too is that this LLC is like this is your operating company traditionally inside if you form with our RLS, is that it can't have any other employees that aren't besides you and your spouse associated with it. If you have other employees besides you and your spouse, we actually need to talk about a SEP IRA, which is going to be a different presentation.
Mm-hmm.
Cool. So here's a little bit about the owner's manual of the solo 401k. So we talked about before. These are saying that say we can contribute 56,000. Next year it's going to be 61. So at 61,000, if it's you and a spouse, that's 61,000 times 2, which gives you $122,000 in total amount that you can shelter using a solo 401k. And what you do there is you create inside your operating company. Remember the operating company that we just talked about right here, this traditional LLC operating company. We're then able to take that money and push it into the solo 401k, and 100% of the money that we put into the solo 401k, we can then invest into whatever investments we want to make, as long as they're not prohibited. So you can't invest in speculative things like art, but stocks, gold, crypto, real estate, all going to be great investments you can make with a solo 401k. And if you ever need the money out of your retirement account, you can loan yourself back up to 50%. So you get to shelter the money from taxes. And if you need it, you can loan it back to yourself. Anything extra on there, Pete, that you want to add?
No, just again, it's a 50% loan to yourself. So, and that has to be paid back over about 5 years, but that 5 years also there'll be interest charged, but that interest charge will go back to your solo 401k balance. So you're actually just paying yourself interest to take a loan.
Good point. Yeah, you get to pay interest to yourself there. And because you're paying interest to yourself, then it also means that you're going to be able to increase your total balance inside of your solo 401k.
Right.
I have a pro tip for you guys here. Watch out, pro tip. Pro tip has to do with our depreciation. Sorry, my mouse is going a little crazy here. So the pro tip that we have here is going to be around how you're using depreciation. So for most all of our real estate investments, what do we typically do? We say, hey, well, all of the income that I'm making inside of my passive income from my real estate, I'm going to take the depreciation and I'm going to use that to offset my income. I use my passive losses from my real estate to offset my passive gains from my real estate. Very typical strategy. One of the reasons why we love real estate is because of that depreciation. However, you might consider saying, well, I would actually prefer to instead of using my depreciation, right, which lowers my tax basis on my properties, it means I'm going to have higher capital gains whenever I sell that property. Instead, what I want to do is take that income and channel it into a solo 401k. And I'm not going to depreciate my property. I'm going to leave my tax basis high because I want to keep my capital gains low whenever I sell it. Right? So what you would do in that case is that you would just take the income, don't take the depreciation, and then take the income and then put it through into your solo 401k. For other people that say, well, I am making more money than here through my real estate than I can offset with my depreciation. And those cases, you're also going to want to use a solo 401k because that's that ability to be able to help avoid on those taxes as well. So you can play a game in here too with how much depreciation do I want to use? How much of my tax basis do I want to use now versus maybe in the future, right? And maybe it's a better idea for me just to use this retirement account because I can contribute up to $61,000 in this retirement account and I can leave my depreciation exactly where it's at, my tax basis and depreciation exactly where it's at. So that way I don't have to pay anything higher inside of capital gains. Did I explain all that correctly, Pete?
Correct, yeah. And again, that's something you're going to want to model or have a scenario analysis done, which we'll be able to help you out.
Yeah, I think we can either help you. We're able to help people out that on like a one-on-one basis, on like an hourly basis here with us. We're also going to be looking at doing some of that modeling here in our small group coaching. So if you haven't signed up to participate inside of our small group coaching, highly recommend that you do that to be able to upskill on how to learn how to model. It's incredible. Once you can learn how to model, it's like unlocking a superpower of analysis that you can do. And by the way, we're talking about like spreadsheet modeling, not like the glamour shots kind of modeling. Me and Pete, we are not glamour models. No. We are very much spreadsheet nerds when it comes to that kind of stuff. And we're stoked to be able to teach you that kind of stuff or be able to help work with you on how you can model that out. Yeah. Or maybe Pete might be a model, but I'm sure not. I don't know.
Not these days.
Not after I turn 30. After that, it doesn't happen anymore. So FAQ, guys, what can you invest in the solo 401k? You can invest in just about anything, like any type of security, alternative investments like real estate, private placements, private investments. You can loan it. You can buy metals with it. You can buy tax liens. You can buy equities. Just about anything that's not on a very limited, prohibited transaction list. And then opening the solo 401k Pete, when people are looking to open solo 401ks, is it typically a very time-intensive process, and can they use traditional 401ks or Roth 401ks? How does that work?
When you open a 401k, you can select when you do the sole, you can select a traditional or a Roth 401k. Again, the traditional solo 401ks get offer you tax savings up front. A Roth you're gonna have to pay taxes on that and contribute post-tax dollars. But then when you take it out later on down the line, when you're retired, you may not have to pay as much in taxes. But setting them up is usually pretty simple. I think it takes, if you use us, 1 to 3 weeks. It's not too time consuming.
Excellent. And so we typically it'll take us about 1 to 3 weeks to be able to set it up, depending upon the complexity, right? As Pete just mentioned in there. We recommend that you set these up at the beginning of the year. Why? Because at the end of the year, we have hundreds of people that will hit us up being like, I got to set up a solo 401k and I need an S corporation. And by the way, there's only a week left in the year. And I'm like, hey, did you know that we're all out on vacation doing stuff with our families at that time? So the time to set these up are going to be now, because at the end of the year, but it's going to be already too late to be able to put all of the pieces together. Because remember, it's not just setting up the solo 401k. You likely will also need an LLC, Texas, an S corporation, or another S corporation. You're going to need the proper structuring in place as well. So if you already have that in place, awesome. You just set up the solo 401k and go. But if you need extra pieces, then we're going to be crunch time. So we recommend to go ahead and set that up now. I guarantee you, during your investing life, especially if you're active in this business, you will be utilizing a solo 401k to be saving money on taxes. So you're going to want to have that set up to be able to utilize. And then
Scott,
go ahead,
add is also just from a cash flow standpoint, you want to set it up earlier in the year, because if you set up later in the year, you're going to run into the time crunch if people can set it up. You're also going to have to do larger distributions, larger payments as a W-2 to be able to max out the solo 401k. So if you started, January, February, you could have 12, 11 months to pay yourself that employee contribution and have it lower throughout the year, so you have more cash in your pocket than having to write a huge $19,000, $20,000 check in November, December.
Yeah, I don't know about you, but I prefer making smaller payments over time than huge, 5-figure payments there at the end of the year. That makes a ton of sense. Thanks for chiming in on that, Pete.
Yeah.
And then I wanted to also make sure that we get here is like the general rule here for loans to yourself is you can generally loan yourself up to 50% of the vested account balance. Maximum loans are typically $50,000. And that amount can actually vary depending upon if you already have a solo 401k plan. That's to the individual. So if it's like you and a spouse, then you'll be able to loan out more. And then it can also depend upon, what else have you been doing, right? So there's a little bit into the complexity on the loan amounts. But again, that's one of the things that it's a benefit of working with us as the law firm, is we're able to help you navigate those waters to make sure that you don't accidentally do something wrong, right? How can you use this tool to your maximum advantage whenever that comes up? And that's what we're going to help you be able to do. So thank you guys so much for joining us today on this presentation for the solo 401k. If you're a real estate investor that is active in this business, even if you're bringing in all rental income, you have no W-2, no 1099 income coming in now, the solo 401k is a great option for you to go ahead and establish to be able to help, protect your depreciation, but also to be able to contribute any of those extra dollars. I guarantee it that you will be using it here in the future, because it's foundational to every tax strategy for real estate investors. And Pete, I was wondering if you could share with us a little bit about, how many people that you're working with here on tax end up wanting to set up a solo 401k after you're able to go and review their tax returns and start charting out what their tax strategy looks like.
So of all the people I meet with and we do our tax planning and strategy session, I'm in about the 90 percentile of our customers that want the solo 401k, and the ones that don't want it already have the solo 401k, so they already exist. But yeah, 90% of the people are wanting it because it is the quickest way to lower your taxes and build your wealth.
Excellent. Well, thank you so much, Pete, for chiming in on that. For everybody looking to set up the solo 401k, I congratulate you on being able to take those steps forward of increasing your sophistication and infrastructure for saving money on taxes. As you've heard here today, Pete is super knowledgeable on how to use all of these tools and be able to make sure that you have a good plan in place for your taxes. And there's a number of ways that you can start to work with Pete and myself about what is going to be the right tax plan for you. And that's true if you just need us for an hour to talk through, say, hey, here's some things I'm kicking around of what's going to be important for me. It could be that you're somebody that comes in and says, hey, listen, I'm really looking to do basic returns and I need a lot more education. You're going to be a great fit for our large group coaching and some of our basic tax services. And if you're a business owner or somebody that has higher worth, higher income, and you're like, man, I really need somebody to come in here and just do it all for me. Can you just build all of the modeling for me? I don't want to go to the large group stuff and have to learn it on my own. I don't want to have to do all that showing up every month to be able to participate with other real estate investors and have to upskill. I just want somebody to come get it done for me. That also is available for you as well too through our private, our tax forensic, our tax deep dives that we're able to do as well too. So whatever level that you're needing help at, whether it's just setting up a solo 401k, whether you just need a little bit of time to talk to a professional to make sure that you're having the really important I's dotted and T's crossed, whether you need basic tax prep done and you'd like to have some more advanced coaching on education as well as skill set developments and part of our monthly small group, or if you're already a business owner or high net worth or high income individual that says, hey, I just need some done for me solutions with a tax attorney and a CPA, MBA, CFO, then we're able to help you on any of those levels, and we ask you to reach out to us. So stay tuned for our future tax education. I look forward to seeing you and connecting with you on the phone, over Zoom, and through our group meetings. Thanks, guys.
Thank you.